What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything stocks and investing. In today's video, we're going to go over the biggest trades from the Wallstreetbets forum of the past week, so we can learn from other people's experiences. First, let's take a look at a near total loss on the Tesla YOLO. User Juju Stocks went all in on Tesla a while back, with 690 strike calls on Tesla expiring on June 25th. As of the very next trading day after expiry, Tesla was trading just under the strike price of $690 a share. Unfortunately, calls don't pay out any money for being close to the strike price. The result was that a few minutes before the end of trading on the day of expiry, this trader's position had degraded to 2 cents per option, down from $4.67 paid. $14,000 of initial investment was wiped out entirely. To add insult to injury, the day before expiry on June 24th, Tesla actually reached $696 a share. That's $6 above the strike price, meaning that the calls would have been profitable if he had sold them. He would have been able to sell for some amount of money greater than the $6 of intrinsic value in the options at that time, which would have been at least a 30% gain on his $4.50 per option investment. But he didn't, and those calls all ended up expiring worthless. Commenter ORS823 says that the OP should use this experience to learn not to be too greedy. Perhaps it would have made more sense to sell a little bit once he had made some gains, if he didn't do so. Good luck on your future plays. Next we have user YourXK with a massive gain on Virgin Galactic. This Robinhood trader made more than 20,000% in just one day off of his out-of-the-money calls. He paid only 4 cents per call option, and now they are worth a staggering $4.10 each. With 100 contracts equal to 10,000 total call options, that brings the total price appreciation to $40,000. Virgin Galactic stock shot up 40% in one day on June 25th, from $40 a share to $56 a share. The catalyst for the sharp move upward was the company securing FAA approval to send people into space. This was a major milestone after months of failed test flights and speculation that Virgin Galactic was falling behind competitors like Blue Origin. After a test flight of their Spaceship Two on May 22nd, people started speculating that Virgin Galactic might actually be passing Jeff Bezos and Blue Origin in the race to send a human into space. After getting FAA approval and confirming that the May 22nd test flight went according to plan, it seems that Virgin Galactic might actually be ahead of the competition. This stock is one of the OG Wallstreetbets meme stocks from the SPAC era, as one of Chamath Palihapitiya's biggest and most successful SPACs. As such, a gain in Virgin Galactic is taken well by commenters. Who wouldn't love to see a 200-bagger in one day? One person does try to detract from the glory of this $40,000 profit, suggesting that the gains were the result of insider trading rather than trading skill. However, he is quickly dispatched by true Wallstreetbets apes. Congratulations on this massive gain. Next up, we have a massive gain on Alibaba. User Significant Way 2624 was all in on Alibaba calls, specifically 280 strike calls expiring in January 2023, 230 strike calls expiring in July of this year, and 250 strike calls expiring in June of next year. All in, he put about $50,000 into this YOLO. Alibaba stock has been depressed since the Archegos hedge fund incident a few months ago, but in recent days has rebounded strongly. It is now trading around the $230 a share range, up from about $210 a share previously. Because this trader held slightly out of the money calls with a lot of time till expiry, he was able to profit from a highly leveraged position in the stock, making more than $25,000 of pure profit. One interesting thing to notice about his 3 positions is that the farther out the expiry of his calls, the higher the strike price. His calls expiring the soonest, in July of this year, have a strike price of $230, which is around the current price of Alibaba stock. Because the expiry is very close, the lower strike price helped them become at the money before expiry, and now have more than tripled in value since the OP bought them. The calls with the next earliest expiry, expiring in June of next year, have a strike price of $250. Because there is more than a year till expiry, the OP was more ambitious with the strike price, and they are still $30 out of the money. The calls expiring in January of 2023 are even more out of the money, with strikes of $280. However, because there is so much time till expiry, he was still able to make a nice 40% return on it so far, with a year and a half left to make even more gains. The OP's strategy of buying long-dated options might have saved a number of fellow Wallstreetbets traders some frustration. User I Was Right Once laments the fact that he owned calls on Alibaba like the OP did, but sold them too early before the real gains came in. Lord Shesho says that psychologically, he'll hold losses all day long, but as soon as he breaks even or makes a small profit on a trade, he gets a strong urge to sell. The OP's strategy of holding long-dated options might take some of the short-termism out of these traders' heads. Congratulations on your massive gains. Next, we have a Wall Street Bets trader who nearly had a heart attack due to a negative $1 million balance showing up on his TD Ameritrade account. He had been trading options on AMC, including short put positions. He says that he received an email from his broker saying something about his short put option being assigned, and that he now owes $1 million to service his contract. Sure enough, when he looked on his Ameritrade app, he saw a $1,156,000 negative buying power balance, with $0 of cash in his account. To make matters worse, he is unable to view his positions and balances in further detail on Ameritrade's website due to website maintenance. Understandably, he is feeling the impending doom and asks what he should do about it. This shocking realization puts the OP in the essence of Wall Street Bets stupidity, at least in the mind of commenter No Cry. However, this commenter soon realized that because the OP's full trade was a put spread, that his losses should be capped. Another commenter says that if your broker is saying you owe them more than $1 million, then it is clearly an issue with the broker, not you. The upper leg of the AMC put should have been exercised, which means that the OP's put spread has expired fully in the money. With a put spread, if the lower leg gets assigned, then that means that the upper leg should also have been exercised, leading to the max gain possible for the option strategy. The OP then confirms that he indeed had a put debit spread with a $75 and an $80 leg. Also, the problem with the negative balance seems to have been restored. It turns out that the negative $1 million balance was a glitch in Ameritrade's brokerage app, and the OP probably actually made money on the position. But still, seeing a negative $1 million balance on your trading app, even if it is not real, understandably has been known to almost give traders heart attacks. Next up, we have a truly painful loss courtesy of user Wait This Isn't 4chan. He posted this screenshot of a YOLO on Blackberry of epic proportions. About a month ago, Blackberry benefited from a huge short squeeze around the same time as AMC and other Wall Street Bet stocks were also spiking. At its peak, Blackberry hit about $16 a share briefly. It looks like this Wall Street Bets trader bought at or near the peak, with a cost basis of about $14.38. Since then, Blackberry has been on a slow bleed down towards its original levels, so far down about 20%. And it's brought our friend's $250,000 portfolio down with it. So far, he's lost a whopping $58,000 of his $295,000 initial investment in Blackberry stock. With that big of a position, even a small percentage change can mean a huge amount of money. That $58,000 loss is about the same amount of money that you would pay for a Porsche sports car. And based on the chart, it looks like Blackberry could be in for more losses going forward. At least being part of a community like Wall Street Bets can help traders cope with their losses. Two others commented that they are also down 47% and 25% respectively on Blackberry. Yet another person is also down 19%, just like the OP, and now does not feel as bad knowing that others have also lost. And yet another commenter encourages these traders to have diamond hands in the hopes that Blackberry will soon go back up. Good luck to anyone who is still long Blackberry. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also, leave a comment saying what you think about these trades. As always, thank you so much for watching and we'll see you in the next video. Wall Street Millennial, signing out.